Right, in this chapter, again continuing with the top rules, I know there's a lot of them, but continuing with the top rules, what I want to do is get through some of the types of trades that I don't actually like much, types of investments. Remember, it's not just about where you make the money, it's also where you avoid losing it as well, which leads to success. So, where does that leave us? Okay, liquidity. What do I mean by that? I'm looking on the whole for stocks which have smooth price movements. And I'll show you exactly what I mean in a second. I want to avoid spiky prices. Again, I'll show you what I mean. It's very difficult to put that into mathematical terms, but it's like beauty. Difficult to describe, but you know it when you see it. And I'll show you some of the prices and what I mean in a second. And very often, private investors, they make life very difficult for themselves because they do go around picking spiky stocks and spiky prices. And when I show you what I mean by that in a second, you'll see exactly what common problem probably you've faced yourself in this area. I'm also looking to ensure that I'm not going to pick a trade where I have to put a stop loss which will be easily hit. And that'll happen if it's not got a smooth price movement, i.e. the price moves like this, or it's a spiky price, it's always going like this. Because if I do have to put a stop loss somewhere like this because my price target is not too far away from my entry, then obviously my stop loss is likely to get hit. There's no point entering that trade. So that's the other thing I look for. Smooth prices, avoid spikes, and avoid trades where the stop loss is likely and easily to be hit. So what am I talking about? Okay, start looking at an example. This company, Alliance Unicam. Let me show you what I mean. If we looked at this at one level, you could say, oh look, nice trend. Downward one, and then you've got an upward one. You had an upward one over here. Good, interesting stock. You could trade it on the upside, trade it on the downside, trade it on the upside. But actually, in reality, it's awful. Look at the spikiness of this, and this one, and this one, and this one. Oh, and this one, and this one, and this one. It's absolutely atrocious. Why is it atrocious? Well, the reason is that if you looked at it from the perspective of, let's say, you're entering this particular stock, and let's say you're going on the upward over here. What happens if you get to this day? If you get to this day, you see the stock make a 1, 2, 3-day low. You don't know, as it spikes all the way down here, whether it's about to turn and move lower, or whether in actual fact the trade is going to continue. If a stock has been doing that historically, you can bet your bottom dollar that it's going to probably continue doing it going into the future. Similarly, let's say you got into this trend here, so you entered, so you're lucky enough to enter around here. Then as this, on this particular day, this moves all the way down here, you don't know whether this trend's going to continue or not. You end up getting out. Oh, and by the way, I'll tell you what will happen. You'll end up getting out somewhere around here, only to see the stock then continue ever upwards once it's got rid of you. One theory about the market is that the nature of the markets is a bit like a bucking bronco, those wild horses. The job is to try and get as many market participants off it as possible. And how does it do that? Well, it does things like this. By spiking higher, people get out too soon or too early, and then the trend continues onwards. That's what a bucking bronco does. My point is that I avoid stocks which look like this.